Oh boy, what Ford just tried pulling off is something we gotta talk about in this video, especially as it relates to Tesla. Are things as great at Tesla as they're made out to seem? We'll talk about that. We'll talk about margin projections. We'll talk about full self-driving. We'll even talk about Mercedes and how they're competing, as well as potentially a setback that Chevy Cruze just got hit with, along with Google's Waymo. Let's get started. Just remember, today is January 30th, which means the coupon codes on Building Your Wealth expire today. Check out those programs linked down below. Email me, kevin@mekevin.com, if you're looking for a custom bundle coupon. We'll get you taken care of. Thank you so much, and we'll see you there. Remember, you get lifetime access, best price guaranteed. A lot of folks, when Tesla's price cuts first came out, said, oh, don't worry. Tesla's price cuts won't affect the broader market. Nobody else is going to follow them and cut prices. What happened basically within a week of Tesla's price cuts? BMW cut prices $3,500 to $10,000 for multiple of their markets, their vehicles in their market. And take a look at this Zero Hedge article here. 5 days after we reported that Tesla was accused of weaponizing price cuts in order to crush their competition in the electric vehicle space, Ford has announced price cuts for their electric Mustang Mach-E, along with several other models across the board. Keep in mind that Ford is not even profitable on the Mach-E. Ford is arguing that they are going to ramp up significantly their production of the Mustang Mach-E in 2023, which is basically a way of saying they're going to lose even more money in a recessionary year and in an autos crisis this year. That's wild. Zero Hedge goes on to say that Tesla's move to squeeze competitors by sacrificing some of its strong profit margins could be seen in recent price cuts of the Model Y, which is now priced at $53,000 from around $66,000. If buyers qualify for the federal tax credit, they can knock off another $7,500. Bank of America analyst John Murphy says, unlike Tesla, traditional automakers have very thin profit margins or lose money on their EV lineups. And that's exactly what I just said about Ford. So reducing prices is even worse. Keep in mind that if a company like BYD, everybody's freaking out about BYD, but if a company like BYD ends up dropping prices, they only have 1.45% of their net profit margin, and then they crumble after that. And then they're negative, which might happen in a recession. So now there's a suggestion of who's next to drop prices. We'll see. But at the same time as we have this price war happening in the auto space, we have the Tesla earnings report that came out last week. And I want to be very clear, because I don't think folks are paying attention to this. I do think this is a red flag, and don't get me wrong, okay? I'm a big fan of Tesla. I'm an investor in Tesla. I've got a lot of exposure to Tesla in many different ways. And I'm not short Tesla, but I want to be very clear about this. And I'm saying this because I think a lot of people get misled by little quotes that float around the internet. Tesla does not have a lot of free cash. And I'm not talking about free cash flow. Free cash flow already fell by more than half in the last quarter. I'm talking about free cash. That is cash available above and beyond their actual accounts payable and current liabilities. That is payables and liabilities due within the next year. Tesla does not have a lot of free cash. There's a reason they just signed up for an up to $7 billion credit line just to have some flexibility with their cash. They also did not tell us why their other long-term liabilities increased by exactly $1 billion. Just all of a sudden, a little $1 billion increase in current liabilities. Don't mind that at all. Don't mind the $26 billion current liabilities portion next to their $22 billion in cash. Now, every time I do this, you get people that are brilliant and they start saying things like, oh, but Kevin, they have all this inventory, and when they sell their cars in inventory, their $13 billion in inventory, then they'll have more cash again. But those are the same people who then go double count the money in free cash flow. You don't need to look at inventories. You need to look at operating cash flow. And the operating free cash flow is down to about $1.4 billion. That's still fine, but the investments Tesla expects to make over the rest of the year are going to be very high. So Tesla's cash position will be tight. There is a reason why Elon Musk says, hey, buybacks are a great idea, but we're not going to do them because we don't know how bad the recession is going to be, and we want to make sure we have enough money for 2023 and all of our expansion plans. That's great. I'm glad they're expanding. Giga Nevada has already been announced. We expect potentially an announcement for an Indonesia plant, maybe a Northeast Mexico plant. Each of these could have initial investments in the range of $3 to $5 billion. Massive output of expenses, massive money pits, right? This is good. It's obviously good for Tesla's expansion and their belief that demand will remain high. But keep in mind, Tesla also implied that more price cuts could come to their vehicles in the future. And I want to be very clear about this because I don't want anybody to get blindsided going, oh my gosh, the margin was 25% in Q4. Everybody thought Q4 was going to be bad. Wait for Q1. I think that's when you're actually going to see their margin potentially fall as low as 20%. That's what they alluded to in their earnings. Actually, they didn't even allude to it. They straight up said it. They straight up said in their earnings call, you should expect a gross margin of 80%. And not in 2023, but going forward after 2023, we will try to approach a 70% gross cost of goods sold again. So that would be a 20% margin expected for 2023, and a 30% is what they're going to try to get to in the future. So keep in mind, when people are bragging about Tesla and the price cuts, it's going to hit their margin. Q4 was not the bad. Q4 was not the worst. And it's more likely, in my opinion, to be Q1, Q2, 2023. And there will probably be more price cuts, which put even more pressure on Tesla. That's okay, though, because of Tesla's massive existing profit. As long as they can continue to fund their expansion, Tesla's going to eat up the rest of the industry. And now we're starting to see not only the rest of the industry cut their prices, which is expected, but on top of the price war that's going on, now you've also apparently had San Francisco officials complain, asking that Waymo and Chevy Cruise scale back their self-driving division because too many of their self-driving vehicles are getting stuck on roads and are basically jamming up the flow of traffic because nobody is available to go to solve these, or nobody can quickly get these vehicles off the road because, well, nobody's in them. This is in contrast with Tesla's self-driving system. Over the weekend, over one of the morning live streams in the weekend, I reviewed the Mercedes self-driving system. And the Mercedes self-driving system was a joke. Let me just give you a rundown of it. The Mercedes self-driving system wouldn't enable in turns on a highway. And they said, well, this is unusual that you would have a turn in a highway. Bizarre. But then also, the Mercedes self-driving system only operates the Mercedes drive system, which you get in like the $115,000 plus vehicles, the EQE, EQSs. The Mercedes self-driving system only operates when you have a lead car. So in other words, if you're on the highway and there's nobody else there, one of those beautiful times to be able to drive on the highway, you can't enable the system. So you have to speed up to get behind a car. Once you're within about 100 meters of the car in front of you, then you can enable the drive system because it needs someone to follow. You know what? It needs a Tesla to follow, like the sheep that Mercedes is being. Then it will only work when you're going less than 40 miles an hour. It's basically just adaptive cruise control, which keeps you at a distance from the car in front of you, and then lane keep assist. That's boring. That's stupid. Tesla's had that for 5 years. When I bought my Tesla, my Model X in 2017, I didn't need a car in front of me. I didn't have a 40 mile an hour limitation. I could turn on autopilot on the highway, and autopilot on the like city streets was not good back then. It wasn't advertised as being good back then either. It's gotten really good now. Now I've got FSD. It's freaking incredible. I'll talk about that in a moment. But autopilot back 5 years ago was phenomenal, and no 40 mile an hour restriction on self-driving. So keep in mind, while I'm somewhat saying warnings about Tesla, that does not make me a Tesla bear. It makes me a Tesla realist. I'm not only the little bull kid who's only going to say good stuff about Tesla because their whole portfolio is in Tesla. It's not true for me. It shouldn't be true for you. You shouldn't be all in on one stock. But I do believe that Tesla's full self-driving is miles ahead of the competition. I don't really care about Cruise, don't really care about Waymo. Great, they've got mapped self-driving in certain areas, which now regulators are pissed about. Mercedes doesn't hold a candle, neither the other automakers or BYD, because what do they have? Adaptive cruise control and lane keep at certain speed limits. That's stupid, that's boring. What does Tesla have? Tesla has the ability for me to sit down in the car, press where I want to go on my navigation, which is basically always the same destination downtown, and I hit go, and then you go. Just kidding. I would never drink and drive, anymore. not that I ever have. But anyway, the what's great about the vehicle now is that you plug in a destination and you hit go, and the darn thing almost always drives without intervention now. It's pretty incredible. It's getting good. And I just got another software update yesterday, which I'm really excited to try out. This is something that the competition can't hold a candle to. And I think that's where the massive margins are going to come from for Tesla. Keep in mind that right now, the way I'm modeling Tesla is I am assuming the worst case scenario for Tesla with vehicle margins, and I'm using that 80% number as cost of goods sold for my Tesla projections. By using 80% as a cost of goods sold, I think you could be a lot more comfortable with your projections. And it's fair, I think, to include some reduced level of forecast for a take rate on FSD, because you're not going to realize a full $15,000 sale on everyone who gets FSD. The problem with that, or the reason for that, is Tesla does allow people to sign up for FSD as a monthly service option, right? So you can pay $1.99 or whatever to get FSD per month. That money is going to flow through as cash flow to Tesla a lot more slowly than somebody who just swipes the credit card, so to speak, and finances a $15,000 purchase, which they might do. In fact, that is the best hope, is that as long as Tesla can have individuals include in their vehicle financing full self-driving, that's probably the best way for Tesla to increase their actual free cash flow. Because now the lenders are basically paying for free cash flow, or for full self-driving, rather than the individual basically borrowing full self-driving at $1.99 a month for Tesla. Now, what's interesting about that is if we do a quick calculator, let's do an auto loan calculator. If we do an auto loan calculator, and let's go ahead and go with $15,000 for 60, no, let's go to 72 months, because everybody's going with longer now. And let's go with 6% down payment, 0. I'll put 0 for sales tax and all this other crap. So if I finance a $15,000 car loan at 6%, I'm looking at a payment of principal and interest of about, what do we got here? Let's see here, monthly schedule. I don't care about the monthly schedule. My goodness, why do they make the amortization so darn complicated? There we go, $248. Now that's actually really interesting, because if you can finance full self-driving in your 7-year car loan for $248 and own full self-driving, you might be inclined to take full self-driving up front with your financing, still get the Inflation Reduction Tax Credit, because that is deemed a separate sale. Even though you could finance it together, it's deemed a separate sale from the sales price of the car for the factor of qualifying for the Inflation Reduction Act tax credit. In English, you could still get the $7,500 credit even if you add on FSD afterwards and finance it all together. So think about it. Finance full self-driving over 72 months for $248 per month, principal and interest for $15,000, right? Or borrow it from Tesla at $199 per month, but never actually own it. I think a lot of people could end up going for that in their upfront financing as a take rate with Tesla. So that's where the profit comes from for Tesla. That, I think, is going to substantially boost margins for Tesla. And so that's where I think you could probably throw in at least a 10% full take rate on Tesla FSD. So if they sell 4 million vehicles come 2025, average selling price $47,000 per vehicle, throw on only a nominal 10% take rate at $15,000. you're looking at least $400 per share for Tesla. And we're not even at $200 yet right now. Now, if we do hit $200 by the expiration of the coupon code, I have to dye my hair green. But right now, Tesla's flat in pre-market, so who knows? But then again, it was flat in pre-market Friday, and the darn thing ended up running 11% that day. Pretty wild. But Ford shares again down now 2.5% pre-market on the announcement of these price cuts. We'll see what happens. But I think this is very good information for you to keep in mind if you're exposed to the EV sector. You're going into an era of a lot of car repossessions. You're going into an era of high interest rates that are staying stubbornly high. So you're not really getting relief on the auto loan segment. More delinquencies means fewer people can qualify for a new car. High 10-year treasuries mean interest rates are staying high, even as financial conditions in the stock market are starting to slow. In other words, lower because stocks are going up, financial conditions loosen. Interest rates are still high. Part of this is with this massive shorting happening in the treasuries market. It's a massive amount of selling, leading yields to actually go up, actually driving rates higher. You have a tight cash position for Tesla. And even though their margin is substantially higher than the competition, Ford losing money, BYD probably soon to lose money, full self-driving from the competitors being worthless, in my opinion, you're not in the clear for Tesla, right? You still have headwinds. Though, fortunately, in the future, Tesla could probably sell vehicles at a break even and take full self-driving and still have a 20 to 30% margin solely by selling people full self-driving. That's pretty remarkable. So we'll see what happens. Anyway, that's my take on a little bit of insight into Tesla, what's going on with the Ford market. Make sure that you remember today is the expiration of the coupon code, January 30th. Maximize that coupon code. We're looking at a large price increase. You get buy-sell alerts in the Stocks and Psychology of Money group. Real estate analysis and the real estate investing course is really, really important for you to get into owning real estate. So check out those. Do-it-yourself property management, rental renovations, build your wealth as by making more money as well through the Elite Hustlers course. Probably this weekend, we're starting the exclusive Elite Hustler live streams. So if you want to be a part of those where we talk business and it's me, it's not like other people talking to you about business. We can talk about your business together with me. That'll likely start this weekend. Join the Elite Hustlers course for that. If you want to bundle up multiple courses, email us, kevin@meetkevin.com, whether you're an existing member or not. Love to have you there.